Hi, good afternoon. Welcome to the marketplace. Coming up, cedi recovers strongly from last week's losses after improved dollar support from the Bank of Ghana. Also coming up, economist Professor Govt cautions against any rush to return to the international capital market after Ghana's credit ratings rebound.
The way we have used the international capital market in shoring up our international reserves over the years, that reason is no longer relevant. So the rush to go for FX from the international capital market remains mute.
My name is Darryl Kwal. Thanks for being with us. Details coming up. And that was your look at the currency market. We begin from there this afternoon. The cedi has begun recovering some of the losses it recorded against the dollar last week on both the interbank and forex markets. This comes after the Bank of Ghana increases dollar supply to the market in recent days. More details in the following report.
Earlier this week, the dollar was going for about 10 Ghana cedis, 70 pesos, when it comes to the rate that most of the commercial banks were offering to their clients when it comes to transactions. However, it has made some marginal gains and is currently selling at around 10 Ghana cedis 30 pesos. On the Forex Bureau market, it went up by as much as 13 Ghana cedis to a dollar. However, over the past 2 working days, it has made some strong recovery and is going for 12 Ghana cedis 30 pesos. Some of the commercial banks have told Joy Business that the pressure last week was fueled by the sudden spike in dollar demand by businesses due to the recent claims by President John Mahama that the true value of the Ghana cedi could be around 10 to 12 Ghana cedis. Therefore, most of them were trying to buy more dollars now against future depreciation of the Ghana cedi. Also, some offshore investors were redeeming their investment, resulting in that depreciation for last week. But for many, the critical question here is that can we just depend purely on market forces for the cedi's stability against the dollar? Or the Bank of Ghana may always have to step in with dollar support to try and normalize things.
All right, interesting questions in that report. We'll dig into that later in the bulletin. But economist Professor Govt is urging the government to maintain strict control over its spending whilst continuing efforts to boost revenue. Despite the recent credit rating upgrade by Fitch Ratings, the agency raised Ghana's long-term foreign currency issuer default rating from restricted default to B- with a stable outlook. Speaking on PM Express with Evans Mensah, Professor Bokpin cautioned against any rush to the international markets for borrowing once the current IMF program concludes.
I think reopening the market from the domestic point of view is more critical.
Okay.
It's more, for me, that should be more of a priority than the international capital market, because if you look at the way we have used the international capital market in shoring up our international reserves over the years, that reason is no longer relevant. So the rush to go for FX from the international capital market remains mute, given where our reserves are right now, and also the drive to build reserves. But I think more importantly, let's look at the domestic market. Let's extend the yield curve. That way, it gives us leverage. Because the idea is that this will be cedi denominated. If you have to go to the international capital market, let's say towards the end of this year, or even next year, chances are that you could be paying something slightly higher. Okay, and that is something that we should be mindful. Even though B- is very good, it's still below investment grade. Okay, so there's a potential that there could be default going forward. And we said it on your network here, somewhere early part of 2022, that normally once you declare a preemptive debt restructuring, it won't take you less than 4 years before the market will receive you favorably and all of. So it's about weighing them. So I think that there shouldn't be a rush necessary to go to the international capital market, but we should assess our options.
And the domestic market should be an option.
The domestic market we should prioritize.
Address the
I can see from the IMF supported program why 2027 is critical because of the maturity clustering of our debt from the way it's been restructured, both from the domestic and then the external. So once the market reopens from 2027, we'll be able to roll over those debts.
Director Middle East and Africa Sovereign Ratings at Fitch, Thomas Garrow, says Ghana is unlikely to tap international capital markets under the current IMF terms.
That means that we do not identify a path to default. When you are rated into triple T and below range, that means that we as a rating agency do identify a credible and potentially rapid path to default. This is no longer the case in Ghana following the restructuring of the external debt that is still ongoing, but also following the restructuring of domestic debt in 2023 with the domestic debt exchange program. So given that we do not identify this credible path to default, and given that Ghana has, I mentioned the weaknesses, but Ghana also has some strengths in terms of rating. This is why we decided to assign a B-. Then, whether we do consider that Ghana will tomorrow get back to the international capital market, that's not the case. As long as Ghana is under the existing IMF program, Ghana will not issue on international capital markets, basically because of the conditions that are attached to the existing IMF program. But your initial presentation, you showed that potentially Ghana could get back to the international capital market in 2027. That's a possibility. The IMF program will be over. It's up to the administration of Ghana to decide whether it wants to extend the existing program, whether it wants a successor program. But technically speaking, Ghana could issue in 2027.
All right, joining me on Zoom, Head of Finance at Melbourne Capital, Nelson Kujo-Kwagweji. Good afternoon to you. I want to first start off with credit ratings upgrade. What are the key risks if Ghana rushes back to the international capital markets after the IMF program ends amid this Fitch upgrade?
All right, thank you very much, Darrell. Good afternoon once again for having me this afternoon. Let me first of all say that the fact that your rating has improved is not a guarantee or is not a passport for you to go and borrow. We have seen that recently we were at triple C+, which was a substantial risk. And currently we are at a B-, which is a highly speculative, state or, state. What it simply means is that our fundamentals are improving. The financial and economic health of the country is improving, and that it is not a passport for Ghana to go back to the international capital market to go and borrow. What we should rather be doing is to concentrate more within the domestic setting. The risk here is that once we make that decision to go back to borrow from the international capital market, one, we are going to increase our debt stock, and two, we are going to derail all the gains that we have made. The B- rating is supported by strong economic and financial, fundamentals that we have enjoyed over this short period. And so going back to borrow, the risk is that we may end up increasing our debt stock, and we may even end up not being, having the capacity to repay, and that may further downgrade our rating.
How should investors interpret this B- upgrade in the short to medium term?
Well, to investors, what it technically means is that the financial and economic health of the country is improving. It's just like you are sick, you go to hospital, the doctors ask you to go and do a lab test and bring the lab test, and they tell you that, oh, based on the lab result that you have brought, your condition is improving. And so for investors, the fact that we are improving in terms of our sovereign rating simply means that the confidence is bouncing back in the economy. Government is assuring investors that there is no cause for alarm. And so once they lend their money to government, government will have the capacity to borrow. And so it simply means that the financial and economic health of the country is improving. But moving from CCC plus, which is a substantial risk, to B minus, is not so much a gain that will warrant us going back to the international capital market to borrow.
Right, and I just also want to add this bit just for the education of our audience, what a stable outlook actually implies for Ghana's borrowing and access to credit in the next 12 to 18 months, maybe.
All right, stable outlook simply means that your rating will remain unchanged looking into the future. Now, you can either have a rating with stable outlook, or you can have a rating with positive outlook, or you can have a rating with negative outlook. With regards to stable outlook, what it simply means is that going into the future, we don't expect anything untoward to happen to the fundamentals of the economy that will actually derail government capacity to meet its financial commitment. So in terms of
Okay, appears Nelson is frozen. They will try and get him back on air to continue his points on this Fitch ratings upgrade and what it means for us going forward. We'll try and re-establish contact with Nelson and get that interview to continue. But you're watching The Marketplace. Let's take a short break. We will be right back. All right, welcome back to The Marketplace. I'll continue with our conversation on the Fitch upgrade and what it means going forward in terms of borrowing from the international market. Head of Finance at Melbourne Capital with me, Henry Kudo-Kwabeji. Before we went on the break, you explained to us what Fitch's stable outlook actually implied for borrowing going forward. I want you to conclude on that. Plus, I wanted to add, what structural reforms or fiscal measures would you recommend for the government to sustain this credit improvement?
Is that going into the future, our rating will remain unchanged because of the strong fundamentals that we are currently enjoying. So in terms of assets, we may have an improved access, and in terms of cost of borrowing, we may borrow at a relatively lower cost. Then regarding the structural reform, I think that going forward, we should implement and adopt policies that actually reflect, the financial and economic contextual background of Ghana. We should rather focus more on homegrown policies that are tailored towards the Ghanaian economic context. And so much focus may be on agriculture. Another focus may also be on government homegrown policies. In terms of fiscal discipline, I expect the government to be more disciplined in terms of their expenditure. Government should be more prudent in terms of their expenditure, management program. We have seen that since the beginning of the year, since this new government came to office, in terms of expenditure, they have been very prudent, they have been very efficient. And once we continue with that, I think we will have the stability as far as the financial sector, the fiscal sector is concerned. There again, we must also make sure that we don't rush to borrow so much, most especially from the international capital market. The earlier speakers actually indicated that we should focus more on domestic borrowing. In any case, when we go back and borrow, we will end up building our reserve. But the question is that sustainable? No. We need to focus more within the domestic economy and mobilize enough, revenue. Pension funds are having a lot of liquidity. And if you look at the investment guidelines by MPRA, most of the investment are tailored towards government securities. So I think the government should take advantage of that and mobilize enough, revenue, enough debt from the domestic economy.
Just a minute. One quick question about our top story to do with the improved dollar supply. The Bank of Ghana pumping some more dollars into the system to meet demand. We saw that the previous week it scaled down the dollars in the system. What do you make of what's happening in terms of stability of the currency going forward and how sustainable this is?
All right. I mean, this is not the first time that Bank of Ghana is injecting dollars into the economy. But the question is, has that actually solved the problem? The question is no. And so Bank of Ghana injecting dollars into the economy is just a short-term measure to meet the demands of, those who actually need the dollars. I think that will not solve the problem of the stability of the cedi. Going forward, we should focus more on building more reserve using our external sector, cocoa, gold, remittances, and any other source of revenue that can bring in the forex. We have seen in the past, government has injected a lot of dollars in the system, but these were just knee-jerk measures. The problem of the stability of the cedi still persisted. And so I think we should focus more on our external sector and rake in, the necessary forex to build the buffers so that we can even, meet whatever demands that those who actually need them brings on board.
Thank you so much, Head of Finance at Merban Capital, Henry Nelson Kujokwabeji. Thank you so much. I appreciate your time. Now, the governor of the Bank of Ghana has expressed concern over the high cost of financing faced by small and medium-sized enterprises in the country. Speaking at the launch of the Ghana Banker magazine by the Chartered Institute of Bankers in Accra, Dr. Johnson Esiama said the central bank is committed to implementing measures that will ease access to affordable credit for small businesses.
We cannot sustain a real sector going forward. We've done this over the years where SMEs have to borrow at beyond 30% and are expected to compete, to grow, or to export. It just doesn't work. Hence, we need to dismantle the structural inefficiencies that keep the cost of credit high. And so we started work on these in a number of ways. First one, we are strengthening Ghana's collateral registry as well as the credit referencing system. Second, we are engaging banks to better price their risk and streamline intermediation costs. And I'm happy to declare that there's a committee currently working to reform the Ghana reference rate, which will clearly bring the benchmark for lending significantly down. And the third one is that we are improving fiscal monetary coordination to reduce crowding out. Yesterday, I was with the finance minister and we spoke at length.
And you're watching The Marketplace. With tensions rising between Israel and Iran, how concerned are you that this could spike global fuel prices and reverse recent fuel reductions in Ghana? That's a question for our poll this week. Joining me in studio, my colleague Isaac Atese-Nyako, who has been gauging your thoughts on social media. Welcome. So, as you can see from the screens, the war is really on. Both countries trading missiles between themselves. So where are we at before we go to the poll when it comes to the war and its impact on oil and the economy globally?
Exactly, Darrell. Just a couple of hours ago, Israel reported that an Iranian missile hit a health facility somewhere in Beersheba. That's if I got the name right. But yeah, and that Iran is actually saying that more missiles could fly in if Israel doesn't back off. Now, what's also happening right now is that there are concerns that U.S. may get into the fight because...
And it would escalate.
Exactly. It's getting to that point yet. And so we jumped onto social media to find out what people are saying, what people are thinking. Now, if they are concerned if effects of these, of this conflict, could have a ripple effect on Ghana, and what are exactly their concerns?
We need to point out that global oil prices have soared since the conflict began by 10%.
Exactly.
That's why we had $76 a barrel, I saw in the morning. Yeah.
Exactly. I mean, sometime last week it was around 65 to 67, dollars per barrel. But now, like you're saying, even now before I got into the studio, it's hovering around 77,
Wow.
So yeah, it keeps going up by the minute. But then again, sometime last week, we reported that global oil prices could soar, like we are saying right now. And Koma came to say that, yeah, it could have an effect in the next pricing window or next couple of pricing windows. But we also spoke to the Israeli Prime Minister, and he also mentioned that the Iranians are willing to come to the table with a serious, intention. They could back down. Now, what Iran is saying right now is that they are not going to surrender totally. However, they are open for diplomatic discussions. I don't really know exactly. I don't know what that means.
Another interesting development at the beginning of the week, the postponement and implementation of a new 1 cedi levy on fuel. People are thinking, well, it's because of this conflict, that's why.
Exactly, yeah. And also meant to cushion Ghanaians as well. And so we got onto social media, and then we put up a poll. Now, 3 options if you are concerned, and if you are somewhat concerned, and if you are not bothered at all. So right here on X, you realize that about 58% of voters are saying that they are very concerned. A lot of people are also raising issues or going back, bringing up issues of the Russia-Ukrainian war and its effects, and saying this could have a similar effect on the economy. Again, on Facebook, again, very concerned, giving us, a high response, if you like. But then, again, somewhat concerned, very low, and then not really. People are not really bothered. But let's go to the comments then, shall we? Now, Love Mac Yagbe, that's if I got the name right, says
that... just make fun of everything.
Exactly. Where is the I don't care column? For them, I'm sure he doesn't really care whether, it's good or bad. But you can never say you don't care, because it's going to have an effect on you.
Okay, Famina says, anybody following the activities, Iran says it will target the oil fields in the Middle East if the U.S. joins the war. The U.S. is also threatening to join the war. We hope there is peace soon. That's our hope as well. Summer Boy, Isaac, what does he say?
Now, if other countries join the war, there could be a global recession. Some way, somehow, it would affect the whole world. Again, expressing concerns that its ripple effects could be enormous. Again,
this one, Aziz says, we have Muhammad as president and he's a magician, so the issue that will never be affected.
Exactly. A lot of people believe in this current government and believe that whatever it is they are saying could or they are doing currently could, turn things around and sustain the gains Ghana has, enjoyed so far. If we can move to the next slide. I mean, a couple of more, comments. Again, this one says, very concerned, NPP suffered from the Russia-Ukraine war, NDC likely to suffer from the Israel-Iran war, and then its effect. Again, it's going to have an effect on developing countries like Ghana. NS Deborah is saying. Now, Koku Honam says that the most annoying part is the what? The warmongers who will benefit from it. I mean, you can never make do.
Well, we'll keep watching. We'll keep seeing how that unfolds in the Middle East. Of course, there's going to be an impact. We just hope that there is some peace very soon. Thank you so much, Isaac Atasenyako. And that's the marketplace. Thanks for watching, everyone. More news on our website, myjoyonline.com/business. My name is Darryl Crow. Thanks for watching. We will be back same time tomorrow.